All right, folks, welcome to the Land Fixer podcast. I am your host, as usual, Logan Swanson. And today we are met with Alice Chen. Say hi to everybody.
Hi, everybody.
Awesome.
Nice to
Very
see you,
glad to
Logan.
have you here. Folks, as usual, if you are interested in getting your land deals funded, whether they're entitlement projects, subdivisions, anything like that, reach out to us at thelandfixer.com. We have all that information there for you. If you have not subscribed, hit subscribe to this, share it to your friends, give me 5-star reviews or 4-star. No, only 5 stars. Um, and we appreciate you. All right. Alice, would you please tell us a little bit about yourself? You are involved here in the Pender Hastings Capital Fund. Are you the fund manager? You started it. What's your role here?
Yes. Yeah. So I'm one of the two co-founders. So I'm one of the two GPs, general partners in the fund. Pender Hastings Capital is a private equity firm focused on real estate strategies, both in Canada and in the US. So we launched our first fund in the US earlier this year. So this is focused on land development. And what we are is we are capital partners to the best-in-class land developers in the country. So that's people that work on entitlements and people that do horizontal developments. And right now in this fund, our thesis is funding projects where the land developers turn raw land into finished lots for national home builders.
Okay. And man, where to start? I'm actually going to back you way up. So, what did you do before you got into this, or were you born and raised as a fund manager?
I don't think anyone is born and raised as a
Ah,
fund
okay.
manager. I don't know if that's a good thing or a bad thing. So interesting path that I took. So I actually started out as a corporate lawyer in Vancouver, BC. So I practiced corporate law, mergers and acquisitions, securities offerings at Canada's number one law firm, McCarthy Tétrault. So I did that for a couple of years, lived the lifestyle as you would see on TV shows like Suits, and said, no, that's not my life. And I was very entrepreneurial. So I went into founding businesses 16 years ago now. So 16 years ago, started my entrepreneurial journey, founded, co-founded, operated, exited businesses across industries in international trade, technology, consumer packaging goods. Along the way, invest in my own capital from, the exits, and became a professional investor. So I managed, best-in-class fund of funds in Canada, aggregated the best real estate manager strategies over there, and did really well. And then, during COVID, I relocated to United States. And so I've
Mm.
been here for about 5 years or so. I see tremendous opportunities everywhere. And so we're very excited to basically extend our firm's offerings. So we have a family of funds in Vancouver, BC, but, I'm the partner spearheading our efforts in the US.
Okay, beautiful. So, well, tell me, what's it like starting a fund? This is something that I've considered doing in the past. I know a lot of folks who are interested in doing it, but it just seems so scary. So much red tape, right? You're talking to the FEC. Like, what all's involved?
Yeah, so yes, so it's not simple and yet it's not complex. So everything just starts with learning some of the basics. And I have actually a lot of educational materials on my personal website, which is alicechencompanies.com. Chen spelled Chen. So that's, there's a link to my YouTube channels. I've taught many master classes on fund formation. So, where do we begin? So you're probably very familiar with syndications, right? And I would
Hmm.
imagine your audience as well. So a fund is no different than a syndication. It's very similar, except a fund is typically multiple assets, where syndications is singular in terms of its asset, right? So think of a fund as a pool of money that, is set out to invest in a certain type of business or certain type of real estate asset. So in our case, we are deploying the fund into land development projects, right? So other people, they're fund managers in multifamily, they're acquiring multifamily properties, doing what they said they would do. They might be doing the value add. Maybe some people are working on single family homes, BTR. It could be a variety of different business angles, which we call a thesis. That's an investment thesis or a fund thesis. So typically you would have a fund. There's two types of people in a fund. There's the general partners. So these are the investment or fund managers. as well as you have the LPs. You probably heard this term LP. What's LP? Limited partner. So those are the people that write checks. Those are the LP. So I'm, at the same time, GP, my own fund, I have been an LP many times in other people's funds. So you can learn a lot by being on both sides of the table. But typically, you have these two buckets of people, and then LPs write the checks. GP will write some checks into the pool of funds as well. And then now you have this private equity fund. It could be packaged into LLC. There's different permutations based on preferences, business intentions, tax advantages, and this and that. But overall, it's a GP-LP structure. That's kind of the base structure. So when you have this fund, you have capital to deploy, right? So it's GP's job to figure out how to execute on the thesis that you have discussed with them as an LP. So that's kind of the basics.
Yeah, so you're the good steward of other people's money. And how flexible are you able to be with that money? So, for example, I've considered starting a fund that would fund land flips, land entitlement projects, but also buy notes, land notes, owner financed properties, deeds of trust, things like that. Um, how flexible can you be with that? Obviously, I couldn't start a fund, do some real estate transactions, and then, go purchase a hospital or something. You have to stay within a certain lane, I'm assuming. But
Correct.
how tight is it?
Yeah, so it's kind of two layers to your question. So it's as tight as you want to make it be. So a lot of the constraints or the parameters are actually set out in your offering documents. So when I say offering documents, typically a private equity fund offering, you would have these legal documents. You would have offering memorandum, which could be
Hmm.
your deck. You have the PPM, you have the subscription documents, you have the entity operating agreements. This whole set of documents is called operating documents. And in the operating documents or offering documents, you would set out exactly where the boundaries are, right? So if it's a fund that the thesis is to buy hospitals as assets and improve upon them, then it would be outside of your thesis to go and do some other things, right?
Hmm.
So it's possible that, like, for example, in our land development fund, um, it's not just entitlements or it's not just horizontal development, but you got to make it very clear at the outset. You can't really start with something and then change halfway. I mean, some funds have some loopholes in the language and they do that. It's not advisable. It's generally when that happens, it's not a good sign. At the same time, it's a marketing thing. It's like, I mean, I always think about, what would I do if I were the investor? Would I want to invest in a fund that's just kind of a basket of everything and
Vague. Yeah.
anything? It doesn't make sense, right? You want to have a marketing angle. And it's impossible for an operator to be good across so many different asset classes, right? So I would say if you're LP looking to invest, look for a singular focus, a tight focus, in a team that has demonstrated track record on executing on that thesis.
Yeah, otherwise, who's going to want to give you your money, right?
Exactly.
Okay, so you started this fund. That's awesome. What attracted you to development specifically? And how do you feel about current market conditions as far as building goes?
Yeah, great questions, Logan. So, as a real estate investor, right? So, we're managing a fund, but we're really a professional or institutional investor. So, what we're looking at are strategies that are sustainable long term, right? So, you're looking for value creation opportunities. Typically, that would be attached to a problem that is, big enough to be sustained for the next 3, 5, 10 years, right? Because you don't want to involve your firm's resources, whether it's human capital, whether it's infrastructure, marketing bandwidth on something that's only going to be around for a couple years. So we take the job of seeking out an investment strategy very seriously, and it takes us a long time to actually lock in on something. So, for example, real estate is also hyper local. What makes sense for one market would not make sense for another. So, in our home market, home Canadian market of Vancouver, Canada, which is a similar market when you compare to Seattle, Bay Area, San Diego, these urban areas, they have limited amount of land to be built upon. So in Vancouver, you're sandwiched between the ocean and the mountains, right? So in a way, you're very blessed, but in terms of being a real estate developer, it's a challenge. So a couple years ago, the city finally kind of woke up and said, okay, wait a second, we have a housing crisis, and that's because we don't enough, more to be built. So in order to increase the density, they then passed a law that says, okay, if you would like to convert a single family home lot into what we call multiplex in Canada, right? In California, we call it ADU,
Yeah.
accessory
Accessory
dwelling
dwelling
unit.
unit. Yeah.
Yeah, probably same in Texas. So if you want to convert single family home, I mean, a lot of these homes could be from like 50 years ago where it's a small home, but on a big lot, that is such a waste of the space in terms of, confronting, like being confronted with the housing crisis. So why don't we turn that lot into a multiplex, right? A fourplex, fiveplex, sixplex, so that more households can be housed on that same piece of land, right? So in that sense, we saw an opportunity. There's no zoning requirement. Typically, zoning would be 3 years in Vancouver. So, as you can imagine, if zoning takes 3 years, only the big players can actually afford to play in
That's
terms of
insane.
building towers or building like mega mansions, which contributed to a lot of Vancouver's housing problems. And so when this law, came upon us, then we said, okay, that's a great opportunity. And that's why in Vancouver, we have now 6 funds covering 13 projects of such type of single family home to multiplex conversions. And we may be looking to do that in the future, in Seattle, the Bay Area, San Diego. So I'm just illustrating the rationale. So in the States, then we spent a couple more years looking at, okay, what makes sense? Like we were in Texas, like my business partner, co-GP, James, he spent the entire year of 2022 in Dallas, actually, looking
Nice.
around and meeting everybody. Maybe you guys have met, it's very possible. So he looked at value add multifamily. This is circa 2022. But guess what? Halfway through 2022, the interest rate started to hike, right? So
Hmm.
then it's very clear. There's writings on the wall. Okay, well, the interest rate is going to hike. A lot of the places, the rents have actually even dropped or they stagnated. They're not increasing. So then you raise the delta of the equity build, right? So you no longer have that lived. So when we see macroeconomic situations like that, then we pivot and we look at other strategies. So we've looked at BTR, single family home building at scale in Florida. We looked at everything. So about a year ago, we kind of lucked out. So I was at a conference and bumped into one of these best-in-class land developers that we work with. And we started to learn about land development. Like it's not something yet that one would think about on a day-to-day basis unless you know someone that's already in land development, right? But I would
Yeah.
say it's kind of real estate's best kept secret.
Yeah. You're talking to somebody who thinks about it every day. So, yes.
Exactly. So yeah, I would say you're a unicorn, or the people on your podcast, like you guys are relatively a rare breed. Like I haven't really encountered too many people that have thought about land, in terms of investments or in terms of real estate investments. So we started to dig into the strategy. We started to dig into the operators. We met the best in class operators in the country, and we just thought, wow, like this is like an amazing strategy where the land developers they work on turning the raw land into buildable lots for national home builders, like the DR Horton, Lennar, Toll Brothers. They get a forward purchase contract on day
Yep.
one before they begin work. They
Yep.
know exactly how much they're going to make if they just do their jobs properly. I mean, I've been a 16-year serial founder, and I haven't seen a business that has that exit built in, like not like this. So yeah, so it's an incredible opportunity to me, and I just thought it was an amazing strategy. My partner and I really dug into it and decided to cement our footing in this space.
Okay. So, you're 1 year into these sorts of projects?
Yeah, yeah. So
Okay.
we're 1 year into deep diving into these.
And what are you looking for, right? Okay, so I walk up to you and I hand you a plat map and I say I'm going to turn, I'm going to come up with a couple hundred lots here. I'm going to put roads in and power. I've talked to the city a little bit. Let's work together. How do you do this? How do you underwrite things? Kind of overview. Obviously, it's very detailed, but
Sure, sure. Yeah, so really there are two. two buckets of people we're looking for. So one, definitely we're looking to partner with best-in-class land developers. So whether one would be working on entitlements or one would be working on horizontal development, we would look at all the projects, right? So for the entitlement, typically how we work is that uh, we like to work in a way where the exit is actually built in and we reverse engineer the whole process. So typically our operating partners, they have a request from these national home builders or regional scaled home builders. And then, I mean, these are years of relationships, right? That's really where the secret sauce is. And then so they get a call and you know, the home builder may say, hey, land entitlement specialist, like we're looking to build here. We're looking to build a master community here of 1,000 homes. We don't want to do the entitlement. Can you do it? Right. So typically the land entitlement specialist would option a piece of land and then, you know, taking money, right, taking funding from our fund, let's say, and then they use the funds towards getting the entitlement done. And then on the day that it's done, they turn around and they you know, they sell it back to the national home builder. And then they do, but then they buy and sell on the same day. It's a double close or
Hmm.
simultaneous closing. So they just mitigate their risk. So we don't like it when, you know, a party would go ahead and maybe buy a piece of land outright without having the opportunity shopped around and with some type of guarantee and affirmation that it's going to be bought, you know, at the end of the entitlement project. I know that a lot of people do it that way, but as a fund, we're always looking to maximize profit and minimize risk. And that's one way of us looking at how to minimize risk. So we like to have the contracts in place.
So that's interesting. So you would be willing, and this is kind of where, because people bring these sorts of entitlement deals to me regularly to fund. And what I've seen folks ask me for is like, hey, would you just pay for the entitlements? And I'm like, and not own the land? You know, that's very risky, right? And that's not inexpensive. You know, on our entitlement project in Lancaster, we're looking at 350 to $450,000 just on entitlements. So are you comfortable with that, even if you feel like there's a chance that maybe a builder won't buy it at the end, or especially knowing that builders intend to purchase or
Yes.
execute on their contracts, but we've seen it in the past, right? Historically, where if there's a major downturn or a shift in the economy, they'll walk away for even hard money in banks. They'll say we can't afford this deal anymore, and they'll walk away.
Yeah, for sure.
Um,
And that's why we have to do very detailed project level due diligence. So we never fund a project where there's not actually a forward purchase contract in place. So
mhm,
we don't fund unless there's at least one party that's come to the table and sign a contract that says, yes, this is, you know, what we're going to pay this price once the land is entitled, right? So
mhm.
we know how much the land is being purchased for from the original seller and how much is going to be sold to the home builder. So we're comfortable in funding the entitlements, not the land itself, because we have contracts in place. And
Right.
that's actually how typically a private equity firm functions, where you know you're buying into a stream of cash flow or some type of profit sharing scenario. You know, so we don't necessarily need to have the land as the asset, but you know, there's a lot of checks and balances to make sure that everything is looked at carefully. The entitlement specialist would, you know, probably shop it around. So even though
Yep.
with one contract in hand, they should be shopping around.
Yeah.
So there's a plan B and C, you know, buyer as well. So that's the on the land entitlement side. But on the horizontal development side, we find those projects very appealing because then now the land is entitled, right? So DR Horton calls our horizontal developer operator and say, hey, there's we have this tract of lands entitled, right? So buy it from us. We're going to build 1,000 homes here. Buy it from us, $30,000 per lot, let's say. You do your thing, like put the roads, infrastructure onto the land. 2 years later, we will buy back from you $70,000 a lot, right? Here, you know, contract signed, inked, our operating partner then begin the work, right? But before they begin the work, again, they typically would shop it around, you know. So if DR Horton wants this piece of land, they would go to other, you know, builders, maybe of slightly different product type, and say, if DR doesn't take 1,000 homes 2 years from now, would you take 250 here?
Right.
Would you take 500 there? Right. So there's different ways of mitigating the risk, and we have such great operating partners. They really know their stuff. They know it, they know the nuances and how this situation is handled, like at the project level. And our job as the funder, as the private equity fund, their capital partners, is to ask the hard questions and figure out where the risks are, right? And if we can overcome the risk.
Right. Yeah. And we do a lot of that mostly just by we try not to mess with zoning in Texas. Like that's the goal. It's like, all right, if we can just do this without messing with zoning, that's a very
Yeah,
safe subdivision, that's a very
yeah,
safe entitlement process.
yeah.
So question, what do you consider a healthy deal? Now, my understanding, I've never done the, horizontal development of a project, just entitlement stuff, at least to this scale. And my understanding is that developers are looking to make roughly a 25% margin or something along those lines. Like, what do you consider a healthy return on a development project? Use that same example where maybe you're taking down $30,000 lots entitled and then pumping out 70,000. What does that look like in terms of those numbers?
Yeah, so the projects that we consider very healthy have much higher margin than that.
Okay, I was gonna say
So,
that looks
yeah.
very meek to me.
Yes, yes. So I would say they're probably closer to 80%, 60% at the lowest because as like our fund is an investor into the project, right? So we actually get a pref return of 30% right off the bat. So 30%, and then we have a split depending on how much funding we're providing, right? So we have another split with the land developer. So you need to be like in the healthy range to make the whole thing, a meaningful exercise. So I would say I've seen very good numbers. I've seen project returns closer to 100% even. So I
Oh
think
wow.
there's definitely, yeah, I mean, maybe I don't know about your area, but definitely in some of the other states, I've seen these type of numbers. So these are very healthy numbers. I would say, like we don't look at states like California, for example, very difficult to do business in, right? Lots of delays, margins are thin, um, generally speaking. So we tend to pick projects that offer a lot of buffer.
Yeah, so what are the states and areas that you prefer to operate in? Top five.
Again, yeah. So again, it's reverse engineering process. Like we are data driven, so we find projects where the home builders are actually building, right? So if the home builders are going to Kentucky, Tennessee, the Carolinas, like if they're going to these Sunbelt states, then we our funding goes with them, right? Because we are looking for that exit. So right now it looks like it's a lot of Sunbelt states, Texas, Florida, still, very happening. Carolinas, Arizona as well, Kentucky, Tennessee. A lot of these states are I would say pretty active.
Yeah, all my favorites. Yeah, we like to look at the U-Haul data. It's like, all right,
Yes,
where
yes,
are they moving, right? Yeah,
yes.
so I think South Carolina was number 1 this year for U-Haul, and all of a sudden I start seeing all these projects that coming my way about South Carolina deals. So,
And yeah, that's brilliant.
well, awesome. So, what's an example of? Well, actually, here's one question I had. So, is there an ideal product that you stay within, right? So, for me, I always try to stay on the affordable housing side of things because I feel like that is the most, if the economy shifts, you're still safe.
Yeah.
Somebody's going to need an affordable home. That means somebody who is going to try to buy maybe a mid-level home would then step down to a more affordable home as opposed to on the upper end of things, you may have that becoming a less attractive product.
Yes.
So, are there sorts of communities that you prefer to do in terms of maybe density, price point, anything like that?
Yeah, again, so we go from the direction of the home builders, right? So we if they're building starter homes, 250,000 to 450,000 starter homes in this community because their proprietary data support that, right? But your U-Haul data, I think, is just as good. You just basically you're looking at population migration patterns and whether there's a new plant being built or whether the workers are moving, to a certain neighborhood, right? So I think from what we've seen, what makes sense would be these type of starter homes. Maybe the next layer up, the move up homes, but
Hmm.
also stay away from, the luxury, ultra luxury, like in this business model. Of course, I see, deals coming from Beverly Hills, like people are building
Oh
$100 million
yeah, yeah.
homes. And I mean, but that's a entirely different market and different thesis.
Yeah, that would get real scary to me if someone's like, "Yeah, you should
Yes.
buy this,
Yeah.
$3 million piece of land and build a $6 million home on it." I'd be like, "No, I don't
Yeah. Yeah.
know."
Yeah. It's just a totally different game, right?
Yeah. Well, so you say you prefer to work with the experienced investors. So if I'm considering doing my first horizontal project, probably not this year, but maybe next year, where we put in streets and gutters and everything else. Um, I'm assuming you don't work with folks like that. Is that correct? Or if I brought you a screaming hot deal, would you be interested in that?
Yeah, we're open to meeting, people and meeting people doing great work. And congratulations, by the way, Logan, for entering into that. We would definitely take a look if you have the contract with with your clients, like with your ultimate buyers.
Uh-huh.
So if you have those type of safeguards in place, we will take a look.
Okay, and then do you guys have sort of the ability to help underwrite? Okay, so say I did bring you a deal and I thought it was a great deal, and you looked at it and you're like, well, you have your building costs incorrect here, or there's not enough margin here. Are you able to really help somebody bringing you a deal to suss those numbers out?
Yeah, we don't really offer that type of services. Like we're not, an underwriting consulting agency, so we don't really do that. We evaluate the deals for our fund to see if we will want to fund them.
Okay, cool. Um, and then do you have any experience with like, I guess this probably falls out of your purview, but in Texas here, a lot of people are implementing like master plan communities with municipal utility districts and things like that. Do you have any experience with that? That seems very intense.
Not particularly. Yeah, tell me more
Okay.
about it.
Well, I mean, the idea is instead of the developer borrowing money to run the streets, water, et cetera, do all that flat work, what they do is they create a governmental entity. And that governmental entity issues bonds, and those bonds are bought by the general market, and the funds from the bond sale is used for the development process. I can put you in touch with. I'll send a podcast to you that I've been listening to. This it's
Okay,
fascinating
okay.
stuff. But the
Interesting.
whole benefit of it is, at the end of the day, if you're the developer, you're not personally relied or personally responsible for the funds that you're using to develop the property. It's
Oh,
transferred
okay.
to the people as they move into and purchase the properties from you. So, say D.R. Horton takes down 25% of the lots, and then another builder takes 25, et cetera. As those lots are sold, the responsibility to pay those bonds is transferred along with the properties, and then ultimately all the way down to who ends up buying the home. So when you buy your home and you move in, you're just paying a special tax that is ultimately paying the bonds that were used to fund the development to the entire community.
Okay. Well, that sounds like another risk mitigation measure. And yeah, please send it to me.
Yeah, it's badass. You'll probably like it.
Mhm.
Well, cool. Do you have any cool stories or interesting projects that you've worked on this past year?
I think I'm very optimistic about land development as an industry. I know that earlier in the year, the headlines were driving everyone crazy. One day it's this, the next day it's that. But I think things have kind of calmed down and the dust are settling, right? So I think right now we are looking at projects that's going to mature and be completed in 3 years, in 5 years. Uh, History repeats itself. So the reason why we have a 4.8 million deficit in single family homes is because back in 2010 when we had the financial crisis, land developers stopped doing
Yeah.
stop developing and the home builders stop developing, right? So then there's this pent up demand and we're very much in that situation again. This problem is not going away. Household formation numbers are steady. They're still increasing because it's not necessarily young people forming families. It's, just the population are splitting into different households because of aging, because of different reasons. And so this deficit is not going away. Like, it's going to be a sustained problem. So just like in the stock market, you buy in the dip and you harvest, in recovery. I would suggest the same thing. So if you're interested in learning about how to get into land investing or land development investing, I welcome you to take a look from that standpoint, and we certainly would be very happy to chat with you.
Okay, cool. And if people wanted to reach out to you to learn more about your services, where would they go?
Yeah, so please, you can find me on my websites. Again, AliceChenCompanies.com.
Okay, beautiful. Well, Alice, I really appreciate your time. I know you're busy. You gotta get back to stuff. I have kids, and I'm surprised they have not burst through the door already. So I think we've found a good stopping point here.
Okay.
This is really cool stuff. I really appreciate it. I'm definitely gonna be. I was already honestly digging through your website a little bit. A lot of cool stuff here. But folks, go check it out. As usual, if you need funding, go to landpartnerfunding.com, check out the landfixer.com. And if you have land and you want to partner with me to develop it or improve it or entitle it in any way, you can email me at thelandfixer@gmail.com. I actually get a lot of really cool people reaching out to me. Canadian the other day. Shout
Oh,
out who
okay.
he is. And folks, thank you for tuning in. We'll see you next time. Cheers.